Okay, so now I'll tell you the one line from your commentary or opening comments that really struck me, and I want to come back to, Kshitij, is where you said, I don't mind booking some profits at this point in some of these funds which have run up. Let's get into that more specifically. I mean, a lot of people right now are wondering whether there is one bout of profit booking coming. A lot of investors have seen handsome returns, to say the least. Would you say it makes sense to go back, look at your portfolio and maybe unwind some of those positions or book some of those profits?
Yes, Tamanna, very well. You said it rightly. Asset allocation is one thing which we always come out with. And with the current equity run-up, you see that you must have, whether you have not gone back and seen, but if you see that your asset allocation is way towards in excess of what you have thought of participation in equities. So if you want to rebalance it, and right now you have a very lucrative window in fixed income also. So I'm just, taking a deviation from what we are discussing. You have fixed income part also where you have gilt funds where we are expecting a rate cut which are very much capable of delivering 10-11% in next 1 year's time. So I think it's a good time where you can actually look at booking some profit from those funds which have rallied up really fast and not with the proper earning guidance for next 5, 6, 7 years, or maybe not supportive earning guidance. So wherever there is a mismatch, I again use the term, and the mismatch is really big. I don't mind, booking some or taking some chips off and booking some profit and parking the same back to fixed income as and when you have some opportunity coming your way, keep some powder dry and you can participate again into those sectors or maybe a multi-cap fund. Or if you don't want to do it at your service rebalancing, maybe you can move to a balanced advantage fund. In fact, even Edelweiss has a very beautiful balanced advantage fund. So you can look at participating into any of the BAFs. So I think that's the right way to do rather than just fixated with that, okay, I have this is the run-up and this will keep on going. I don't think so that, wherever there is a mismatch, it will keep on going like this.
Okay. All right. So look at that. You're seeing on an average, large cap funds have given you between 59 to 60% returns since the last budget. Some of your thematic funds are 130, 140% returns. I mean, it's been a dream run. Trideep, I know it's a tricky question for you, but nevertheless, without talking about any specific fund, I am going to ask you that question. Is this a time, if you're looking at your portfolio at an individual level as an asset manager, to review and take some profits off the table?
I think profit booking, and as long as you can put it to work and reinvest it at a level where returns are better, should always be looked at. And I would say if you look at over the last 1 year or so, particularly the data that you are showing us, shows a meaningful amount of returns have been made in some of the areas like PSUs and also some of the other areas like infrastructure and stuff like that. So two aspects to this. One is that, I think at the moment, one statement I would clearly make without making life tough, which is that I think generally diversified funds make a lot of sense at this point in time than sectoral funds. That's the first statement that I would make, because in diversified funds, the fund manager has the flexibility to move between themes, basis, the changing direction, and also the changing valuations, which are moving quite significantly. Now, in this context, for instance, in the last month or so, there was a large defense index fund which has been launched overall. So clearly, some of those stocks have had very strong days overall from that perspective. Now, that's not to say that the government's focus from defense is likely going to go away. No, in fact, it's going to probably strengthen. But versus that of valuations, given that we have seen already stocks run up quite meaningfully, maybe things may even out over a period of time. Hence, I was suggesting that two of the categories of funds which are my favorites in this current circumstances would be a flexi-cap fund or a multi-cap fund, because it kind of gives the investors and the fund manager leeway to move around wherever valuations are still sanguine, earnings growth still robust, and valuations don't fully capture what earnings growth is likely to reflect. So maybe from some of these thematic funds, profit booking could be looked at and moved on to more diversified funds like flexi-cap and multi-cap funds. That certainly I would probably wouldn't mind shying away from talking straight on your show.
Yeah, I'm glad for that, Pradeep, and really appreciate it because that's what at the end of the day we're talking about investors and viewers.